following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their own opinions according to their belief system. So whatever they think about you is not about you, but it is about them. That's a wild one, man. Market-wise, let's take a look at it out here. We have the Dow Industrials right now just trading down 107. You get the NASDAQ down 85. S&Ps are off 20. Gold contract down $5.40, trading at $12.54 an ounce. We have silver down 19 cents, $16.06 an ounce. Copper off a penny and a half, $2.97 a pound. Light sweet crude up $1.86, $72.39 a barrel. Notes and bonds. Bottom line, higher price, lower yield. 10-year note up 12 ticks, 120.12. 30-year up a full point plus 2 ticks, 145.10. King dollar up 664 ticks, trading at 95.010. The euro is at 115.53 to 1 US dollar. The yen is trading out here at a price point of 110.24 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we have potential ABC structures down all over the place, folks, and they are monsters. Okay, let me tell you. So let's start with the Dow Industrials. We start with the Dow, what you're going to see out here. Your first leg down, it is a beauty. So the bottom line is that we'll see where this shakes out, but it looks to me like you get a monster ABC structure down. Right now, we're 24,163. That A to B structure on the way down has a price projection of 23,251. Now, your high volume low that we've been talking about since February 9th, bottom line is 23,360. So your probability gets pretty high that that's where we're going. That's in the Dow Industrials. The NASDAQ Composite, same type of setup inside the Composite. What you have with the Composite right now, okay, so here we go. Composite's breaking apart as we're talking right here. So Composite right now, we're trading at 74.69. The number inside the Composite is 67.95. The low of February 9th is 66.30. These are big numbers, man. These are big numbers, no doubt about it. The S&P, the cash S&P, we're right now at 27.09. That number is 26.53. And let's see, where's 26.53? So 26, that's the 25, well, 26.53. Well, the next swing point is 26.76. That's the swing from May. Bottom line is that the S&P looks like it's going to take the biggest beating, meaning from where we are right now, because the high volume low in the S&P is 25.32. It's a very large number, no doubt about that. Gold contract. What do we have with the gold contract? Gold contract continues to have a hard time holding price. Gold contract right now, GCU. Sorry about that, folks. We'll get this baby up. Gold, gold, gold. GCQ. Okay, so GCQ 8. Gold contract right now, breaking lows. We're at 1254, down 570. GC1, we take a look at this continuous contract, put this baby up, see where we're at. Yeah, well, the next swing point is 1236. Bottom line, yeah, and you're into the you're into the top of the bar already. The top of the bar from the 15th of December was 1260. We're into it by $8, so that's quite a number. Bottom line is that's game 1236. The GDX, you know, we'll see whether this holds up again. Bottom line is that, you know, you're flat out here right now, 14 cents. You're 2182. We'll see if that baby holds up. If we do go over to let's go over to the silver market. So the silver market right now is trading down 1.1%. You're down 18 cents. That is going after, yeah, so well, it's right, it's at a spike swing low. But the bottom line is that as gold had broken out of its consolidation a long time ago, silver looks like it's going to give it up. That's the bottom line. We'll see whether it can hold the $16.15. Notes and bonds continue to want higher price. The notes and bond market, folks, for a long period of time has been saying that, guess what, this market wants to back down. You have a high volume high out here in the 10-year note at 121.03. We're at 120.12. Volume's coming in this again. I expect what you're going to see is you're going to see the follow-through in this. This wants to get up to that number. The yield on the 10-year right now is at 2.826. 30-year, same type of setup in the 30-year. Some of the higher volume equities out here today, this is what you have. You have General Electric up 22 cents. You have Micron Tech down 210. Intel's off 73 cents. You get Ford Motor Company off 11 cents. You get Oracle off 87. Let's go over and take a look at Intel, because Intel this morning, it was pretty amazing. Even when we had been up over 100 points inside the Dow Industrials, Intel couldn't hold price. Intel right now is at $48.94. That's going after, it's got a high volume low at 47.29. The banking structure. So the banking structure has been saying some time, folks, that we're not only going south, but we're going south in a big way. Berkshire Hathaway, BRK, that is what has led the banking structure down. That blew out its swing low on Monday. The swing low, the high volume swing low there was trading at 189.30. You're at 185.18 today. The XLF, same setup in the XLF. It's blowing away the whole consolidation. This is the huge divergence inside the deal that the Fed is continually saying they're going to go up on the short-term rate. If that's the case, the bank should be making money hand over fist between the spread and the 2, the 5, and the 10. Guess what? It's not happening. The XLF is breaking the whole consolidation that we've been in since February 9th. It's under the February 9th swing point. And guess what? That sets up lower prices coming at you. If the banking structure is going south, folks, guess what? We are going south. We're doing ABC structures on the way down. Hold on for the ride. Dow Industrials right now down 142. NASDAQ's off 100. S&Ps are down 23. We're coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are down 126. You get the NASDAQ off 93. S&Ps are off 22. And, you know, if we go over, one of the Tigers was saying that inside the den that it was relating that you see similarity, you see markets similar of 2000 and 2018 topping out. Specifically what he's saying, folks, is that you had the Dow and the S&P top out about 4 to 5 months difference. The real question is going to be, of course, is that was the high in the S&P January? Because the bottom line is that you know, the cash S&P high 2872, that was January 26th. Now the ironic part about the January 26th deal, so check this out. This is insane. I believe January 26th in 2000 was the high of the NASDAQ. Let me just see this for a second, because I remember this. We had January 26th. We had May 10th. Those were numbers that, let's see, I got to go back a long way. Let's see if I can do this. 25 years. Oh, and March 10th it was. It was March 10th, that's right. So the composite got tapped out March 10th. That was in 2000. Okay, that was the composite. If I look at the Dow Industrials, that was, I think the NASDAQ was January 3rd, I believe, in 2000. Bring this back. Yeah, so the Dow was January 3rd. The NASDAQ, as I remember that, we were all having nice big parties, and the millennium was coming in, and then that was all she wrote. Also, the composite, yeah, the composite. So the Dow and S&P was the January. The March 10th was the composite, as well as the Index 100. Hey, we'll find out how this baby's shaking out. The bottom line is that what we're going to find out real quick is that do we have an ABC structure on the way down? So let's talk about an ABC structure on the way down. This is what you have. So you get A to B equals C to D, and what you're going to have to see here, not for confirmed ABC structure down, we go back to Monday. The lows on the S&P, Monday was 26.98. We go take a look at the volume inside the NYSE, and that was 929 million shares. So you'd have to break 929 million shares in order to basically have a confirmed ABC structure on the way down. If we take a look at the SPY, what you'll see in the SPY is that the SPY on Monday did 137 million shares. So bottom line is that you'd have to do more than that at 269.10. The Qs, I believe, the Qs just already broke this one. So this is kind of, so the Qs, well, they're right at it. The Qs, the low 169.81. We've hit 169.94. The Qs are going to need 77 million. We're at 38 right now. Bottom line is that you won't get that volume out here today. If we do go over to the SLV, this is trouble in paradise. There's no doubt. The silver iShares ETF for the silver market is blowing out that consolidation bottom. That consolidation that's been in place since February 9th. And if we put this on a longer basis, you know, you're at 1509, 1444 is the number. That's your next swing point there. What you do have inside the silver and the gold market is that now you're going to be going into how we came off the lows in February of, in January and February of 2016, I think. Yeah, 2016. Pretty wild, man. No doubt about it. The small caps. Let's go take a look at the small caps out here. Small caps are breaking. Oh, so here you go. The small cap's actually breaking Monday's low right now. You're not going to have the volume on the break. You're at 19 million. That low is 164.14. We're at 163. The small caps are making their way back inside the lower range, though. 160.62 would be the number. You get back inside 160.62, you're going to have a failure on volume, failure on price, all of the above. We go take a look at the, let's go take a look at the big dogs and see what they're doing. So Amazon is down 23 bucks. Well, let's go inside the NDX 100 first. So the strength versus the weakness inside the NDX. You get strength is Regeneron, that's up 2.7%. Fox is up 2.3%. I believe that the Feds just turned around and said that the deal can go through. Yeah, that was quick. Disney wins U.S. approval for Foxdale and below to Comcast. They're going to get that deal done as fast as they can, and that, no doubt, is going to be one big monster company. You got Express Scripts is up 1.2%. Now, on the downside, you got Micron Tech down 3.9%. Sirius Satellite is off 3.7%. You get Paychex off 3%. Let's go look at Paychex. So Paychex, the low for the year is 54, the high 73. That is with monster volume. So what are they saying? Let's see. Okay, so they reported earnings this morning. Total revenue increased 9% to $871 million. Payroll service revenue increased 3%. Net operating income increased 17%. Something they don't like in there. Now, what's cool about the payroll companies, folks, is you really want to watch those like a hawk, because if we're coming into basically, a slowing down period the next, who knows, 6, 7, 8 months, whatever that is, it'll show up here in these payroll companies first. This still doesn't look bad. It's still actually pretty good. It had a high volume spike. It's coming down on some juice. This can get down to a price put about 64. Right now you're at 66.91. Let's go take a look at Google. Google had tested its high, failed on price, failed on volume. Yep, that's breaking the lows of Monday. Google's on its way back down to the lower end of consolidation, which is 980. We got the SMHs who led us up. Bottom line, that hasn't held price either. Yep, that's breaking the lows of Monday. SMHs, February 9th, here we go, 93 bucks. Right now, you're at 101. We go to now. Let's go. Hey, let's go over to the oil market. That oil market, you talk about taking off like a rocket ship. So, oil's up 2.4%. We hit $73 in crude today. Your high volume swing low is 72.70. That's gonna be interesting. It tapped it and backed off of it. Yeah, We go to the XLE. We take a look at the XLE. Look at that. Okay, so this is a big heads up. The XLE still can't hold price. Can't get to its highs, can't hold price. Your high in January was the 78.39. We tested that in May. We hit 79.41. Today's a big number, man. This is a monster, actually. It gets up to a price point of a 76.51. Can't hold price. ExxonMobil. If you can't hold price, folks, when oil is at 72 bucks, give me a break, man. Divergence, not saying that we may be topping out inside that oil market. Dow Industrials right now up, down rather, 102. NASDAQ is off 85. S&Ps are off 19. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had volatility, and a couple of tigers and tigresses are saying, where is the tweet? Because we just the Dow is down like $1.25. Now it's only down 66. That being said, this is a normal high volatile market, and you can expect as you're coming through the markets this type of volatility, and it is a ride, man. I mean, let's go take a look at that S&P for a second. What you're going to see, we bring this back, and you know, we got into the lows of this morning. The lows of this morning at 4 o'clock this morning was 27.05. You broke them. You went to 27.03. You come off that 27.03, and you come off with some juice. So bottom line is that this is where the fight's going to be set up now. And, you know, what we had, where the strength was, is we're 1 point above the strength right now. The strength from this morning at 7:40 was at 27.12. So the fight's going to be on right here. That's in the S&Ps. We go take a look at the NASDAQ composite. What you're going to see in the composite, I mean the NDX 100, same type of setup inside the NDX 100. You came down to the lows. The NDX came down to the lows that were out there from Tuesday. Tuesday we had a low out there of 7,005. We hit 7,002. That being said, this is a market that I expect what you're going to see on a continual basis, which is a change. There's no two ways about that. Is that these bounces get sold ASAP. What ends up happening is that you get the bounce, they sell the bounce. And what happens in this case, this bounce, my take here is it came in too early. You don't want the bounce coming in, folks, at 30 minutes with 30 minutes left in the marketplace. You got to get a bounce. If the market's going to turn, you need the bounce at like 15 minutes, 20 minutes at the most before the close. Because then what ends up happening is that they know, well, you don't know anything in the market. You're speculating. But the speculation is that you get plenty of day traders that are going to close out their positions. They're going to go home flat. So when you get a day like today, there's been a lot of bread made on the downside, because the bottom line is that, you know, when you take a look at this S&P, what you're going to see, you know, we've been up for so long that, you know, it's like, okay, but the reality is that we've been down for 2 weeks. And anyone that sold this into this market the last 2 weeks, guess what? You're there. So that is a difference in tone in the marketplace in general. Yeah, the dollar, no doubt. This market is taking conniptions, it looks like, as the dollar goes higher, because the correlation is pretty clean there. Hey, we'll see where the baby shakes out. The composite, the NDX, that being said, what you did have happening, I'm not sure what, it was probably Boeing. In fact, I can look to see whether it was Boeing that got the pop-up inside the Dow Industrials. Because whatever the pop was, it was a good one. So Boeing right now, let's see. Yeah, they all went up. That's the bottom line. They all come off that low. Hey, we'll see where it shakes out. We go take a look at J.P. Morgan, which, you know, that was one of those strongest banks out here. J.P. Morgan, here we go. Unreal. Your high volume low spike, 103.98. Guess where we are, folks? 103.68. So you get J.P. Morgan that's going to break out that bottom. The amazing part about that bottom is that, you know, you hit 103.98, let's say J.P. Morgan. You go all the way back topside to 119. You're talking about, what, almost an 18% move. 8 in J.P. Morgan. It takes 4 months. Guess what? You're right back down there. We put this on a weekly, and this is where the problem, Charles, is going to be, because now what we're doing is this. We are into the December of 2017. That's when we broke topside in the markets. That's when we broke topside in the financials. We're coming into that area. That is saying that J.P. Morgan is going to run down to 97. The top of that bar is 106. The bottom's 107. You're at 103. You come 3 points into a bar. Guess what? You're going to the bottom of that bar. There's not much stopping the market from going to the bottom of that bar. We go take a look at the overseas. We had overseas today. The DAX in Germany. That was up 114 bucks, but really a sideways move. The FTSE in the UK, that was actually up 83, 76.21. We go over to the Nikkei and Asia. What do we have in Asia? The Nikkei was down 70 bucks last night. We go into China. Let's take a look at China. So you had Shanghai down 1% last night. This has been one big mess. The only thing that was positive, the only sector that was positive in China, oh, look at this. Holy cow. So 5 months you go from 35 87 to 28.13. We bring this back. Okay, so we're going after the lows of 2016. That's 26.38. And we'll see if that holds. You know, this could be a monster ABC down, you know, because the leg down is extensive. The leg down started in 2015 at 51.78. You just imagine, and that's, yeah, you see, in 2015, that's what ends up happening. If we break this leg at 26.38, China will end up putting those restrictions in place again. In fact, I don't know if they ever took them off. About they didn't let people sell the market. Basically, if you owned stock, you had to keep the stock. Big, large companies had to keep the stock, all of the above. So it turned into a real problem child. We go into the XLK. We take a look at the tech stocks. XLK right now, this is the technology select sector. Inside of this sector, when we take a look at the weighting structures, Apple is 14%, Microsoft is 11%, you get Facebook 7%, Google's 10%, Visa's 3.6%. So if we take a look at that XLK, this looks like it wants to cross that B point tomorrow. The XLK actually, what's intriguing about the XLK is that really has some real juice coming into this swing point. The lows of Monday was $68.72, 18 million versus 13. And what we will see out here today is that you will see some volume come into these ETF structures at the close. If we go to the IWM, particularly, the IWM throws some monster volume in at the close. Right now, you're at 20 million. I don't think we're going to get more than the 37, but, you know, we'll see how that shakes out. That's coming down, and that's coming down quite quickly. We go take a look at the Facebook. Facebook is the one that has held up quite well. Look at that. It's still holding up. Unbelievable. Yeah. Facebook's not budging, man. You know, bottom line is that that's down $1.54. That is not budging off those highs. The NVIDIA right now, that's going after the swing low from from Monday. That swing low is 235. You're at 237. That has the high volume swing low hanging out there at 204. So 204 is quite a way down. We have brought these up yesterday. Avis and Hertz, you talk about getting toasted and roasted. This is what a fast move. So Hertz 4 days ago was $43. It's $33, folks. Broke out its lower levels. HTZ. We take a look at Hertz. Hertz is in worse shape than Avis. Hertz is trading $16.51. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now down 38. Nasdaq off 69. S&Ps are off 13. Bitcoin's trading 61.29. That is laying at the lows. And so this is coming across. This is quite a trip. FBI has 130 cryptocurrency-related investigations going simultaneously. The Federal Bureau of Investigation has 130 cases tied to cryptocurrencies, according to an agent speaking at a digital asset industry group in conference in New York today. The cases threat tagged as virtual currencies encompasses crimes such as human trafficking, illegal drug sales, kidnapping, ransom attacks. According to Carl Armstrong, a supervisor special agent. There are thousands of cases in the Bureau, so it is a small sliver at this point, Armstrong said at the Crypto Evolve conference Wednesday. The agency has noticed an increase in illegal activity facilitated by the digital currency payments. Well, it's pretty wild if wasn't in there, folks, okay? I can imagine they're going to be opening more of them because what's not in there is, my take is that the amount of fraud in those tokens and the rest of it, never mind about just pushing money around. The amount of folks that have got toasted and roasted inside that business in general, I think is going to be extraordinary. If we go over to Bitcoin right now and take a look at it, yeah, this is laying at the lows. This is trouble in paradise. So your low, well, let's put it this way. Your low in the aspect of how Bloomberg brings this up and how the CME does and the CBOE is 59.22. The reason I'm saying it that way is this, is that when market hours are opened, that's when they are basically laying out the prices. Bitcoin does trade 24 hours a day, folks, on different exchanges. So the exchanges that we're talking about here is the CME and the CBOE. In order to get that when at least there's some that we know there's some trading in it. Bottom line is that the longer it stays down here, you know, it's going to go after that 59.22. So that is going to be a big number. If we do bring this back and you take a look at it. XBT, you break that area and it could be just a huge problem because, you know, the real question is going to be like, okay, you break that 59.22, there's no reason you can't be down to like 2,700 or 1,300 in about a heartbeat. You know, because this has been consolidation that we've been in now 6 months. You know, the day that it started trading at the CME, that was the high, 19,511. Pretty amazing, actually. It's actually unbelievable. Hey, we'll see where that baby goes out. If that's just going to be one more bubble in the financial books as we just move along. Market-wise out here, you know, we had a question in the den. It was a good question, too, that the Tiger was thinking that there should be more volume in the aspect of how we have moved around from the highs to the lows. And what happens is this. This is what is really cool about ABC structures on the way up or the way down. It's really hard, number one, to, let's say an ABC structure on the way down. What you need is this. You need volume on the way down. You need a price going back up with lighter volume. And that's what we're actually going to have out here today. And what that actually does, folks, is bring the probability actually higher that you're going to get the ABC structure on the way down. Because what happened is that the SPY, if we just take the SPY, we had come down on 137 million shares. It tried to get higher today. It got over the highs of Monday, just barely. We got to $273.86. The high was $273.61. Lighter volume, and gave it up on price. Now, what this is, you know, the low of the SPY on Monday is 269.10. My take is that I don't see us getting there today. Where the danger is that, guess what? This baby gets some sleep tonight. It wakes up tomorrow morning, and see ya, don't want to be ya. You know, what we did do on Monday, as well as today, is that Monday we broke the uptrend that had been in place since April 2nd, and we broke it with conviction. Wide price spread, accelerated volume. And then what do we do today? Amazing. You go up and just touch the trend line, and it gives it up in spades. So you start those babies. What's going to get really intriguing here is that as these ABCs, we haven't seen an ABC down in years. And once they start hitting, you want to go to every sector because if these babies start hitting, you're going to see one sector after the next sector after the next sector. And what I would do, I would take a look at that high volume low from February 9th. That's the one you want to basically be looking at. That's where we're going. You know, a lot of these equities have already got down to that price. You'll see them gallop all the way down there again. And if we go over to the NQs again, what you're going to see is that pop a little bit earlier in the NQs, more than likely what that pop was all about, folks, and this is what happens in a down market, is that it was a buy in order to sell. You know, we had hit a low out here in the NQs of 7,002. You got to pop 43 points and about a heartbeat. And bottom line is that, you know, larger traders, they're very capable of doing that, meaning that they want to get short the market either again or they want to get short the market, period. They'll drive the future higher to basically get every equity, future, all of that, and their order to sell the market is at a higher price. And that's what it looks like we have here, because we're coming into this close, and looks like we're going to come into this close, and bottom line, they're going to sell the close off. And, of course, what ends up happening is that the aspect of when you get pops like this, fast markets, if you haven't been in a fast market, we haven't been in a fast market now in quite some time, you got to get used to them. Bottom line is that you're going to have very fast moves. The thing that you're going to learn so much about, it doesn't matter how many tweets come out anymore, how many news stories come out anymore. It doesn't matter whether Kudlow is out there, Navarro is out there, whoever's out there. This train has left the station, man. This train has left the station. The big money's left the station. And what you're going to see, the difference is, and that's what's so cool about why we all like the markets. The market is the market, and the market is talking, walking, and squawking. And guess what? Market's saying that whatever's out here right now, they don't like. They're taking their money. They're going home. And they're saying, okay, I got the cash. I'm getting out of the market. And that's a problem. Bonds, then we go over to the TLT. They want higher price also. TLT right now, that's up $1.10. The high volume swings 122.52. We're at 122.07. Oh, the marijuana stocks. Oh, man, they get smoked. They're up in smoke. Let's go take a look at them. You get Canopy Growth. Canopy Growth, the day that Trudeau said, okay, it's going to be legal, it topped out its high. That high, $48 4 days ago. You're at 37 right now. So we'll see. We'll see whether I wouldn't be biting on these folks. The it was a classic test. The cool thing about Canopy is this. That's a classic test. It will be back up there again, but guess what? It's a monster consolidation. The bottom of the consolidation is 20 bucks, and you're at 37 right now. Stay right there, folks. Next 10 minutes coming back, and you can expect volatility. Dow's down $1.32. NASDAQ is off 103. S&Ps are off 23. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 150. You get the NASDAQ off 107. S&Ps are down 24. You're talking about big action out here. S&Ps are down 0.5%. The NASDAQ is down 1.4. And if you want to see when we're talking about big action, it's pretty amazing. When these NQs go, man, they go. When markets go, they go. But the NQs in particular, folks, okay, it's just amazing the type of movement they can have. The high of the NQ today was 71.51. We're down 150 bucks off of that. The bounce that we came when I was just on the air, we basically bounced up 40 bucks and bounced down 40 bucks just as quick. It's blowing its lows out, has the juice behind it. If we go take a look at the S&Ps, same type of setup in the S&Ps. Looks like that's going to lay out at the lows of today, at least. Yeah, you're laying out. We get the lows. We're at the lows of today. Well, you're off them a bit. 27.03 is the low, or 27.09. But what you're doing is that you're going after the lows of Tuesday. That's how this baby is set up. Dow Industrials, you talk about a fast move, man. The Dow, you know, bottom line is that we were down about $1.25. We had got down as much as only 34 points, and now you're down another 103. And when I just started speaking, coming back, we were actually down 140. So you can see the type of movement the bulls and bears are fighting out here, and they're fighting like a wildfire. Gold, bottom line, we'll see what's going to shake out here, man. Gold can't hold the price. That's the bottom line. We go take a look at this, and it's going to be about the dollar, king dollar out here, and don't be surprised if we're going to hear something about king dollar, because what you do have with king dollar, this thing, I suspect what you have here, folks, is this. As king dollar goes higher, the amount of loans that are dollar loans, if you remember, depending on how long you've been listening, if you remember a couple years ago, everyone was taking dollar loans out. I'm saying to myself, you're out of your mind taking dollar loans out, because you're going to have to pay back in U.S. dollars. The interest rate structure's there. If your currency gets destroyed, you're toast. Well, that's what you have happening, and that's what's rivaling markets in a big way. Stay right there, folks. Going to be coming back with some numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of a relationship. There are two halves in every relationship, but you're only responsible for your half of the relationship. It's not up to you to control the other half, respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We had the Dow Industrials down 165, Nasdaq's down 116, S&Ps are off 22. Bottom line, folks, you get monster ABC structures, potential ABC structures on the way down, and you are talking about some big numbers. If we go over to the Dow Industrials, what you're going to see today in here with the Dow Industrials, this is the first time in 2.5 years that we actually broke every, well, we already had broken the 50 and 100-day moving average. Bottom line, you broke the 200 also out here today. And the amazing part about it is that the last time that this happened is that you have to go back all the way to January of 2015. So it's a big number. The NASDAQ composite. What do you have with the composite? The composite comes down hard. You come down 116 bucks. You break the lows of Monday rather, and the composite hasn't even hit its 50-day moving average yet. So bottom line, what you can expect out here, bottom line, I expect we're going to go after that baby tomorrow. We go into the SPY. What you're going to see inside the SPY, the S&P, we'll just use the SPY. SPY right now, down $1.80 today. You did 96 million shares. That little baby is right under the 50 now, as well as it's right at the 100. Looks like they're all potential ABC structures on the way down. Here's how the numbers lay out. On the Dow Industrials, you get a price projection of 23,251. We are at 24,117. On the NASDAQ Composite, you have a price projection of 67.95, and we're at 74.45, and the S&P is 26.53, and it's the cash S&P that I'm talking about, and we're at 2,700. So you're talking about big numbers. Gold contract just can't hold price. Down 560, trading 12.54. If we do go look at this gold contract, this is where it's going to get really dangerous. The reason being, we're at 12.54. If I take a look at this continuous contract, what you're going to see is that the low of the swing is 12.36. The high is 12.60. You're coming into some other supports from how gold had been trading out there in April of 2016 and 2017. But bottom line, it's having a hard time holding any type of price. Silver blew out its low today, blew out the consolidation. Silver had been holding up. Bottom line, you had divergence in between the silver and gold market. Silver broke out that consolidation today. This is going to be a problem for silver also. That being said, GDX still not the end of the world. GDX, it's hard to comprehend that it hasn't blown out its lows. But guess what? Today's only Wednesday. You're coming into the July 4th week, and a couple of different things that end up happening. So picture, summer trading, Mondays, Fridays. Bottom line, you normally get slow markets. Well, guess what? Monday wasn't slow. The way this market is trading right now, I don't expect Friday to be slow either. Window dressing, I don't see it. You're going to get window smashing. July 4th, the market closes half a day July 3rd. You close the 4th. You're going to have a lot of traders on vacation next week. It looks to me like they're going to be cleaning up their balance sheets, okay, before they go on vacation. That's what it seems like. Just put yourself in their shoes. Do you want to go on vacation on a down week? I don't think so. Bottom line is that you got to clean it up before you get out of there. We're going to take a look at the XLF. Now, the XLF is saying quite a bit. XLF blew out its bottom, folks. The high volume low has been hanging out here. Took out the high volume low on Monday. That was $26.76. It's below it right now. Berkshire Hathaway is the one that let it down. That is the largest weighting structure inside the XLF. Berkshire Hathaway, that high volume low is at 189. It's getting away from it. We're at 184.91. Now, when you bring these back, this is where the danger point comes in. This consolidation had been in place since December of 2017. This thing's going south, man. Berkshire wants to go to 182. Looks like we're going to blow that away. Berkshire blows that away. You're going to see a serious correction down to 157. So you're talking about some big numbers. We go to J.P. Morgan Chase. We look at J.P. Morgan, same type of setup. J.P. Morgan just blew out its high volume low. We're at 103.24. 103.98 was the number. And what you're going to see, they're all setting up the same way. They're major consolidations. They broke the consolidation. J.P. Morgan is also into the breakout area from December of 2017. That sets up, guess what? It's a top-heavy market. When you've been up here for so long, if you take the tops of the highs of the market versus the lows in the consolidation, what you're going to see is every single low has high volume with it. You're building cars to go downtown. The trains left the station. We're going downtown. Bottom line, we'll see where this baby wants to stop. The note and bond market, higher price. The oil market. Now, this is going to get interesting with the oil market. So, oil out here today tested its high. It didn't hold price. Oil went up, was trading $73.06. The way this bar is, I suspect we're going to get tested again because you're talking about big numbers here. 754,000 contracts inside the oil market today. It tested the 72.70, didn't handle it. The XLE looks to me like this is going to be trouble in paradise. You know, picture something. You got oil trading at a high. You got the XLE is still in the same consolidation that it's been in since 2016. It can't get any juice. That says quite a bit, folks. You know, that's just from 2016. When we take a look at the aspect of where the XLE is in general, you know, the highs in the XLE came in 2014 at 101 and you're still at 75. So whatever is going on inside Exxon, Mobil, and Chevron, bottom line, no juice whatsoever. Some of the higher volume equities out here, let's take a look at them. You had GE was up 22 cents. Micron Tech, chip stocks leading down. That was down 233. You had Pinnacle Foods. That's a takeover. That was down 2. They're taking someone else over. That's down 291. Twitter was off 1. Stay right there, folks. Come right back. Dow Industrials finished down 165. Nasdaq down 116. S&P's off 24. Going to come back with our man, Mr. Jim Prince. Coming right back, folks. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 165. We had the Nasdaq off 116. S&P's off 23. Let's go over to Jim Prince. Jim, folks, runs a website, The Greatest Business on Earth. Great day to have him on. Jim, welcome to TFNN.
Thanks, Tom. Really glad to be here.
Yeah, what a day to come on.
Yeah, for sure.
I'll tell you. So, folks, if you know, when you're over at our website at TFNN, you know, right under the very news, you're going to see Nadex News. If you hit that, you're going to come over. You're going to see a great picture of Jim, and Jim will tell us what he's all about. And I see we just finished an article, Nadex Weekly Market Outlook for the Euro USD. So first off, tell the clients something about you, Jim.
Yeah, well, I got my start trading the markets back in 1985, a long time ago. So I'm kind of dating myself there. But I got started with the futures market. And, you know, as time progressed, moved into some other things, into equities, of course, equity options. And here a few years ago into Nadex.
Cool. So what are you looking at? I know you just wrote an outlook on the Euro USD. You want to start there?
Yeah, sure. One of the things I was looking at on Sunday night was for the market to probably pull back a little bit and test the most recent little highs on off the daily chart, and then look for it to kind of move back down. And I think today was a pretty good day for that. We had some good selling there, and if folks get a chance to check out that video on the Nadex website, they'll see an area I highlighted there right around the 1.1676 level.
Yes.
Was the area I was looking for price to push into, just above that. That was the high I was looking for, and then from there getting rejected. And boy, as I said, the follow through today was pretty nice on that.
No doubt. And when you get over there, folks, I have it up right now. What you're going to see is right on the right-hand side, you're going to see the Nadex Weekly Market Outlook for the Euro USD by Jim Prince. So what do you like to trade? Do you trade the currencies the most, commodities? Tell us a little bit about that.
Yeah, so I'm really big into futures, of course, if that's kind of where I cut my teeth. So with the futures, I like the S&P, the NASDAQ, gold, crude oil, bonds. Those are the markets I focus on the most. And if the grains are moving, then I'll look into those as well. So those are probably the primary markets that I focus on. After that will be the Forex markets.
Right. And where are you located, Jim?
I'm actually in Southern Oregon, down in the wine country down here.
How cool is that?
Yeah, there's like 150 wineries just in this valley here.
And not only that, though, when you guys started those Pinots, man, you blow everything away with those Pinots, man.
Yeah,
I've drank a lot of Pinots, and I really like the idea that I just picked the state. Your state. Seriously, do you know what I mean? Because you can get pricey, but guess what? You get a Pinot out of Oregon, they seem to be all good. They really do.
They do indeed. And one of the best things that they do around here are, in fact, a thing called Uncorked, where they basically open up a bunch of wineries and you can go in for a taste test for a small flat fee, so you can kind of decide what you like. And they do that a couple times a year.
Nice. Now, when you're trading markets, what kind of technicals do you like to look at?
Well, I'm a chartist first and foremost, so I focus primarily on price action, but I do have a couple of indicators that I use which measure a momentum in the market as well as time cycles.
Okay.
So I combine that all together and I call it cycle trading.
Nice.
And on top of that, I also use multiple time frame analysis.
Yes. Now, when you say cycles, are you saying cycles in the aspect of lunar cycles, of time cycles? What type of cycles?
Yeah, so I have an oscillator that I use on my charts, and so that's what I use to measure the cycles, whether a market is extended to one side or the other, and then I use that in conjunction with my momentum reading, and that's how I decide whether I'm going to stay in a position, tighten my stop up, or maybe even enter a position.
Nice. Now, folks, when you're watching this video, it's pretty cool because I watched the video. I like the video. What is the elliptic that I saw on the video? Can you explain that?
Yeah, that's just a charting-based tool that I use. Kind of like a circle, if you will.
Okay.
But what I do is I highlight areas based on support and resistance levels that I feel the market has a chance to eventually maybe move into, that I need to be aware of, that sort of thing.
Nice. And, of course, we haven't had fast market like this for a while.
Boy, yeah. I mean, this is great, isn't it? Especially for the summer.
Hey, listen, there's no doubt when you get fast markets, it makes a whole different ball game. So when we take a look at the euro, U.S. dollar, what do you think about? Do you think this dollar is going to keep going higher?
Yeah, I think for this currency pair, I think we still have a little bit of room to the downside here before, in fact, there's a double bottom on the daily chart, and I think there's a good chance that we come back down and test those lows here off the daily chart. I think whether it's going to happen necessarily tomorrow, I'm not too clear on that yet. I haven't had a good chance to look at the charts here this afternoon at the finish of the day, but I think there is still some room to the downside.
Yeah, and of course, what do you think about gold?
So the gold market is pretty interesting. I was looking at that earlier today. I think that we still have a little bit of room. I have a zone that I have marked off specifically on my weekly chart, and that starts right around the 1248 level.
Okay.
So I'm looking for some sort of reaction in that area. And below that, we can even see price perhaps push down to, looks like about the 1236-ish level. Just below that is a 200-period moving average that I like to use as well on my charts. And so I think that whole area there is going to be interesting for the market to see how it reacts.
Isn't it? You know, it's this gold, man. Gold just hasn't held price since April 14th. That thing has been a one-way trip down. And, you know, so silver, you know, blew out its consolidation low this morning. And I guess we're gonna see where that baby wants to go also.
Yeah, I agree. Oftentimes I've found over the years that silver can be a leader for the metals, so maybe gold will follow further.
Oh, it's silver. You're talking about volatility in silver, right?
Oh, yes.
Totally. So what else do you like out here?
Well, the crude oil market, boy, that,
oh, yeah.
that caught some
How did I
legs,
not
didn't it?
talk about crude with you? Oh, my God. Seriously.
No worries. Yeah, so, you know, I've been watching crude. I watch crude, as I mentioned earlier, day in and day out.
Yes.
And from a daily chart standpoint, I mean, we really consolidated there right around the 65.50-ish level. I'm looking at a August futures chart. And, you know, as price kind of compressed there, it decided, boy, I really had a flip in momentum. I had I also focus a lot on divergence in the markets.
Yes.
And, and we see that divergence, and boy, price just jettisoned from there. And now looks like it actually made it cracked that high there.
It did. It did.
Yeah,
it's pretty amazing. Now, gbgmembers.com, that's where we can send people, right? Is that correct?
Yeah, gbemembers.com, that's correct.
gbemembers.com. Our man, Mr. Jim Prince, folks, check it out. He's got a great little website over there. And, of course, we're going to be having you back, Jim. We really appreciate the update, appreciate your take on the market, man.
Hey, thank you, Tom. I appreciate your time.
Absolutely. Have a great one. Have a safe one.
You too.
Thank you. Now, folks, just come over to our website at TFNN. You're going to see right into breaking news. You're going to see the NADEX news. You hit the NADEX news. You go over. You're going to see the video by Jim, NADEX Weekly Market Outlook for the Euro USD. Check it out. Bottom line is that we got action all over the place in these markets out here. And, of course, what has happened out here is that this dollar move, folks, it looks like each and every time that dollar goes higher, this market is taking conniptions. That's the bottom line. You know. Stay right there, folks. We'll be coming right back. We had the Dow Industrials that finished down 165. NASDAQ was off 116. S&P's off 23. We're going to be coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 165, NASDAQ off 116, S&P's off 23. Let's go to our man Paul in Henderson, Nevada. What's going on, brother?
What's happening, Tom? Good afternoon. How you doing?
I'm doing great, man. Yourself?
I'm doing pretty good, man. Pretty good. These markets, everything has been going crazy the past couple of days, so it's been fun.
Exactly.
Hey, I was wondering if you could help me out with this NKTR.
NKTR. Okay, so let's take a look at this. This is Nectar Therapeutics. Okay, clinical stage biopharma company, pipeline of drug candidates that utilize company platforms. Okay, so the low is worth $17 for the year. The high is $111. Okay, so what are we doing here?
So I went short after the gap down. I let it run back into the 9 on the daily. I'm trying to do more swing trading here, but you know it's a little outside of my wheelhouse. So I'm short from about on an average of 57.44.
Nice.
And I just kind of want to get your breakdown on this. If maybe you think we could get into this gap. That's at 36. It would be a big win if it could get down there, but...
Yeah, this is pretty cool. Yeah, you get action here. 1 second. You get an ABC down, actually. Let me see what this is. So see how I just put this on a weekly, Paul, if you're watching Tiger TV?
Yes.
Okay, so your A point out here is 111. Your B point is 70, so you got 41 bucks. Your C point is 98, so you get 50 bucks. And we're at 46. Okay, so that gets dangerous there. Okay, so that's dangerous. So you just finished one ABC down because 50 was the first one. Now you're at 46. See the 46.98 of that November 17th deal?
Mm-hmm.
I think you get action because what happens is this. Now what happens, folks? He's at the beginning of this bar, and the beginning of the bar is on a weekly is $36. The top of the bar is $46.98. You're into this, only by 60 cents at this point. I'd hold on. If you get into this a little bit more tomorrow, you're going to be at 36 bucks, man. And there's no reason this can't go all the way back to 23.
It's been a huge run this year. It's been amazing for that stock.
The one problem that I see is this: is that when you do hit a 1-to-1 ABC structure down, your probability goes much higher that you're going to do something other than the same deal. Let me just see this. I want to see what this was, a 1.382. So if we go 111.36, we'll get this thing exact. Okay, so 111.36. Your B point is 70.69. Okay, so we get 40.67. If I go 1.382 is $56. So $56 minus 92.17. Yeah, there you go. So 35 bucks. What happens with ABC structures, folks, down and up, is that you have a 1-to-1, a 1-to-.382, a 1-to-150, and a 1-to-1.618. If this is a 1-to-1.382 for Paul, you get 35 bucks coming at you, man. And you might, because this is, you know, this had a downdraft before the market even started on the way down. And now you get the market going with you, you know. So I think...
Yeah, the market looks pretty shaky. We'll see what happens tomorrow.
Well, yeah, no, exactly. And you won't have to wait till tomorrow. What you'll see out here tonight, folks, if we go over to the... Asia is going to be in action, you know, bottom line tonight. I mean, you know, we have our Tiger's Den, our trading room, and there will be, you know, bottom line, a lot of action tonight in that room, because you're going to see Asia basically... My take is that we'll see Asia lower. If Asia goes low, it'll go right over to Europe, goes over to Europe. So picture something. This is where this really gets dangerous, where coming into Thursday, you're coming into July 4th week, and when you have a July 4th week when it's on a Wednesday, July 4th week is always a slow week anyway. But when it's on a Wednesday, people take off the whole week. Because the market's closed Tuesday afternoon. So it's a half-a-day Tuesday, closed Wednesday. They take off the whole week. Now picture, if you're running portfolios and you see a market like this, they're gonna be selling this whole week. That's my take on it. Because they're going to go anyway. They're going to leave. The bottom line is that, you know, are they going to basically, you know, protect themselves before they leave? So we'll find out. But I think you get action, man.
Okay, cool. Thank you, Tom. I really appreciate it. Have a good one.
Hey, hold. Stay right there.
Go. Okay.
Talk to me about the cryptocurrency world, man. This is getting dicey here. So tell me what all these, you know, hold. What is that? What is the huddle word? What are those huddle? What was hold on for dear life? Is that what it was?
Yeah, the hodl.
Hodl. So what are the hodl people doing these days?
They're still hodling for the most part, but those Lambos might have turned into Pintos. I'm not sure, man. They might have had to cash in.
Yeah.
You know, a lot of guys, some of the technical analysis guys that I follow in the sector think that 5,000 is where we're going.
Okay.
Before this stops, which, if you remember last April when this thing took off, when it finally passed up the price of gold, it literally went from that price basically straight to 5,000, had a correction down to about 3,000, which looked like the end of the world, because it was a pretty big correction, and then took off to 20,000. So that swing point seems to be where everyone is kind of eyeballing.
Okay, yeah, it's 49.21. I see it. Okay, cool. Okay.
And if that falls apart, this thing's in major trouble.
Wow, it's heavy, man. It really is.
And yeah, I'm kind of bummed out because, you know, I got on that EOS and I had my hand on the trigger to sell it at 23 bucks. And I just kept thinking about what Ethereum did, and EOS being a competitor, I'm thinking, you know, if I give this a year, get up pretty high. And now it's getting close to where it's just like an even trade. And,
okay.
You know, so it's been tough. So the whole market, it's been tough on the whole market. And then, you know, the Litecoin really broke down hard. So that broke down below the 100. It went all the way into the 70s now. And there was even good news. So the SEC came out and said that they're not going to consider Ethereum and Litecoin's, Ethereum and Bitcoin, excuse me, securities, and that did not help at all, which was surprising to me. I thought that would give it a boost. It didn't, so
yeah, no,
pretty bad.
Yeah. Hey, listen, did you hear when Tommy and I had Jason Paff on?
I did not.
Okay, so we get a new guy that he's going to be on every Tuesday, every Thursday. and then he's on Tuesday and Thursday in my show in the afternoon. Then he's on with us Monday morning, okay, at 40 past the hour. You want to listen to him. He's dynamic, number one, but he does a lot with Bitcoin. He does the correlation between the aspect of he's a data analysis freak, basically, and I'm saying that in a good way, okay? No, big time, okay? And he walks you through. He does this analysis as to the Google searches, the Bitcoin, and he's showing you the correlations, man. It's pretty cool.
Oh, awesome. I can't wait to hear that.
Yeah, so he'll be on, he's going to be on my show tomorrow, okay, at 20 past 3, I think. I'll get you the exact time, okay?
All right, sounds good.
Have a great one, man. Have a safe one. Okay, bye-bye.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go over, and, we know that the banking sector, folks, broke out its February lows, broke the consolidation. Berkshire Hathaway led the way down. Now, what's been hanging out here for a long period of time, and they've been hanging alive, is Deutsche Bank. So, if we take a look at Deutsche Bank, what you're going to see here is this. We just hit a 52-week low today, $10.36. This is not the low, though. What Deutsche Bank has been doing, it looks to me, has been, bottom line, going after this. This may be. Let's see. No, it's not the low. There it is. Okay, so Deutsche Bank has a high volume low. The high volume low is from September of 2016, $9.98. Now, we're going to go after that. The top of that, I talked about high volume lows, high volume highs. Bottom line is that we already get into the bar. The top of that bar is 11.85. You're already down a buck and a quarter. You're at 10.38. We're going to go after that 9.98. Now, the real question is going to be, if we break 9.98, this is monster trouble. I expect what you're going to see is that, the German government will have to come in and bail them out. But that may not be the problem child. What may be the problem child here is what is the counterparties? Okay, if you remember counterparties, folks, this is when Lehman went down. It was the counterparty risk that was the biggest deal. And what that specifically means is this, is that all these banks trade with each other. They trade with each other each night. They trade with each other on a short-term basis. They trade with each other on daily, weekly, all of that, right? What happens, the way banks stay alive, is trading overnight, meaning when I say stay alive, to stay within the regulations of their balance sheet. When you look at what we don't know, and we know that all banks are into derivatives in a huge way. Deutsche Bank is into derivatives in an incredible way. There's no, they always have been. Bottom line, we'll see what's behind the books. Revenue-wise, this has been going down for years. Bottom line is that they did $32 billion in gross revenue in 2014. They're going to do like $25 billion this year. So the real question is going to be who's holding the other side of a lot of these derivative trades. Now, when we look at Goldman Sachs inside the financial business rang the bell. And Goldman Sachs had rang the bell when it tested its 2007 high, stayed above that high for a full year, and then came back inside that range with volume. We had broken out, had no volume on the way, the breakout, but guess what? You went higher. You stayed higher, then you gave it up in spades. Now, Goldman, okay, you're talking about a weak link. The high volume low in Goldman is $239. Goldman right now is at $220. So there's something absolutely inside Goldman's trading structure that the market knows and the market doesn't like. Goldman's trading back from December of 2016. Goldman looks to me, we'll see how we hit the next swing point, which is the 209. It wants to go after this 209 level, and depending on how we come in with volume this week, it may be an ABC structure on the way down. Put this on a monthly for a second. Yeah, it's not going to take much for Goldman to be down to 188, actually. What you're going to see is that when we do look at Goldman, you're going to see what a classic failure is. Goldman's high in 2007 was $250. Now, that high was generated with 227 million shares on a monthly. We took that high out, and we took that high out with 88 million shares versus 227. You can see the correlation. The correlation is pretty intense, actually. No volume. Guess what? We stay up there, and then what do? We come back inside. And as we come back inside, the first month we do 76 million. The second month we do 63 million. And now, bottom line, you're back inside that range. When you're back inside that range, you can make the case that you're going to basically, do a deep retracement. A deep retracement can be anywhere about 140 bucks, and right now you're at 220. So I suspect when we let's go over. I want to go over to the DAX in Germany. So that is the principal. Okay, the DAX. Let me make sure I get that. So the DAX. That's exactly where Deutsche Bank is going to be trading. And if I go over and we take a look at Deutsche Bank in euros, that's trading 9 euros right now. What we're going to see out here is that you had volume inside Deutsche Bank today. You hit lower lows. Let me see how. So in euro terms, it's $8.83 euro. We hit, oh, interesting. Look at this. It broke it today. Okay, so check this out. We hit 875 today. This thing's going to blow apart tomorrow morning. Let me pull this back. Yeah, this is, we'll be hearing about this tomorrow morning, folks. right now you're only 23 pennies away from those lows. So bottom line is that we break those lows out, just get out of the way. That is going to throw some heavy selling inside those financials. And the real question is that the cool thing is, when you do look at Deutsche Bank, though, well, I guess we don't know. What I was going to say is that their revenue model, you know, they're smaller than a Goldman Sachs. That doesn't have to mean a lot, though, in the aspect of how much they take in versus what type of leverage that they actually have out. Because it's going to be all about the leverage. The thing that is going to be absolutely bizarre, if, in fact, you have counterparty risk. If we have counterparty risk, and this comes down the pike, that the rest of these banks continue to go lower because of the counterparty risk, then it's going to be right back to the Federal Reserve. It's like, okay, and Congress, it's like, okay, are you kidding me? You just gave up parts of Dodd-Frank again because you're saying that the banks are fine. It's like, it's amazing, folks, okay? This one will really be amazing, because the fact of the matter is, you know, we've seen a lot of different cycles. No one has ever gone in the can from the banks for the amount of fraud that's been out there. They've paid hundreds of billions of dollars. But big deal. Guess what? When it's part of the overhead, it's part of the overhead. If you don't throw someone in the can, why wouldn't they do it over and over again? You know, bottom line, what's going to be really wild is that if, in fact, we hear the next few days that, listen, we're not going to do business with Deutsche Bank anymore, that is going to basically push some things around. It's going to push them around very quickly, meaning to the downside. Go take a look at Bank of America as we're talking about banks. BAC, that blew away its high volume swing low. That was $29. We're at $28.24 right now. And Bank of America, yeah, you look at that, come right into a downdraft. So the high in Bank of America is 55. That was in 2007. You're at 28. You know what? Here's something really wild. So we know Wells Fargo, basically, they take everyone to the cleaners. Well, the wild thing about Wells Fargo, though, whatever they have, Wells Fargo, the chart is in pretty good shape. That's what's really bizarre. You know, so maybe they, you know, my question is, like, the rest of these banks is just something that's laying out there. Wells Fargo, when you think on a fundamental basis, you know, would be a lot lower. It's not. It's not even close either. Dow finished down 165, NASDAQ off 116, S&P's off 23. We'll come right back.
Sacramento has just started new service Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com on newsletters. David White's news Technology Insider is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, out here today, you had a market that failed to hold price. Market was up a good 120 bucks in the Dow. Sold off basically hard. You had the S&P down 0.9%. Dow was down 6/10, and the NASDAQ was down 1.5. Now, they're all set up for ABC structures on the way down, folks. So they have to take out the B point, and you need volume on the takeout. But the bottom line is that you're talking about big numbers. If we just go over to the Dow first, the easiest way to look at this is that you benchmark on the indices a high volume February 9th swing low. And the Dow Industrials, that's 23,360. You know, so the bottom line is that, you know, you're talking about another 800 points down. The IBC structure on the way down is calculated out at 23,251. And the composite, the NASDAQ composite, what you have composite right now, we're at 74.45. That number is 67.95. Now, that being said, the high volume swing low is, well, she's right next to it, actually, 66.30. So bottom line, 66.30, that number's there. And on the S&P cash, what you're talking about, the cash is at 26.99, and that number is 26.53. So this one's only 50 bucks down from where we are. That being said, this is where the real danger comes in, is that your high volume swing low from the cash is 25.32. So you're talking about 150 bucks down from where we are. And, you know, a lot of these equities have already hit it. I would say that the biggest heads up that we have out here, and that's why I spent some time on the banking structure, is the banking structure. The banking structure blew out its high volume swing low. Berkshire blew it out. You have the notes and bonds saying they want higher price. Guess what? That sets up a mean correction, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here, 8 o'clock tomorrow morning. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.